Have you ever stood on a beautiful sun-drenched beach, just moments before a tsunami pulls the water back from the shore? The air is still, the sun is warm, and the waves seem to have vanished, revealing a strange, new landscape of sand and shells. Most people see it as a curiosity, a marvel. They wander out, mesmerized by the unusual calm. But the wise, the ones who understand the ocean's language, they don't walk toward the horizon. They turn and run for the hills. They know that this eerie silence is not a gift. It is a warning. Today, as I speak to you in the heart of November 2025, I'm telling you that the financial ocean is pulling back, and the tide is about to turn with a force that few are prepared for. My name is not important. I am not a financial guru on television, nor do I manage a multi-billion-dollar fund. I'm simply a student of history, a cartographer of cycles. I have spent a lifetime studying the ebbs and flows of human emotion as they manifest in the charts and ledgers of the market. And what I see today is not just a pattern, it is a rhyme, a near-perfect echo of a time that has been etched into our collective memory as a warning. The fall of 1929. We are standing at the precipice of what I call the fifth phase, the final manic crescendo of a symphony that always ends in a deafening crash. This isn't a message of fear. It is a message of preparation. It is a map for those who wish not just to survive the coming storm, but to harness its power to build a legacy. For the greatest transfers of wealth do not happen in the bright, easy days of a bull market. They are forged in the crucible of a crisis. The body of evidence, the signs that the tide is receding, are all around us, visible to anyone who chooses to look past the blinding optimism. There are 6 great signals, 6 warning flares lighting up the twilight sky of this market cycle. The first is the exodus of the insiders, captains of industry, the CEOs and executives who know their companies better than anyone, are selling their own stock at a record pace. They smile for the cameras and speak of endless growth, but their actions tell a different story. They are quietly, methodically lowering their own lifeboats into the water, while the passengers on the deck are still dancing. This is not a vote of no confidence. It is a declaration. The second signal comes from the quiet actions of the wisest investor of our time, a man I will call Arthur Vance, the sage of Summit City. For decades, Vance's simple wisdom has outperformed the most complex algorithms. And what is he doing now? He is not buying. He is not participating in the frenzy. He is sitting on the largest pile of cash in his company's history, a veritable fortress of liquidity. He is not timing the market, he is weighing it. And his scales are telling him that the price of everything is far too high and the value is far too low. When the greatest hunter in the forest decides to stay in his cabin, you know the storm is no longer a distant threat. Third, look at the fuel that has powered this incredible ascent: debt. Specifically, margin debt money borrowed to buy more stocks. It has reached a terrifying peak, hovering near 8% of the entire nation's economic output. Our collective belief in ever-rising prices has become a mountain of borrowed dreams, a tower of IOUs built on a foundation of sand. When the first gust of wind hits, this mountain will not just tremble. It will trigger an avalanche of forced selling, as brokers make margin calls that investors cannot meet, turning a correction into a collapse. The fourth signal is the market's own fever reading, what the academics call the Shiller P/E ratio. It measures stock prices against a decade of average earnings, giving us a clear view of valuation, stripped of short-term noise. A healthy market trades at a ratio of 15 to 20. In the dot-com bubble of 2000, it hit a staggering 44. Today, sits at 35. We are paying $35 for every $1 of long-term inflation-adjusted earnings. We are paying prices that are untethered from reality, justified only by the hope that an even greater fool will pay more tomorrow. This is not investing. It is speculation of the highest order. The fifth signal is the growing chasm between the soaring stock market and the sputtering real economy. While Wall Street celebrates record highs, Main Street is showing signs of fatigue. Economic data is weakening. The foundations are cracking. Supply chains are strained. Inflation is proving stubborn, and the everyday person is feeling the squeeze. The market has become a beautiful facade on a building with a crumbling foundation. For a time, the paint can hide the cracks, but eventually gravity always wins. And finally, the sixth and perhaps most powerful signal, the psychology of the crowd. The sheer, unadulterated optimism, the belief that this time is different, the taxi drivers giving stock tips, the viral videos promising overnight riches, the dismissal of any and all caution is doom-mongering. This is the final deafening chorus of the siren song, luring sailors onto the rocks. History teaches us one lesson above all others. The market is designed to inflict the maximum amount of pain on the maximum number of people. And it does so when conviction is at its highest, when doubt has been completely extinguished. That is the moment we are in right now. So, what does the storm look like? History does not repeat itself, but it rhymes. The 1929 crash was not a single event, but an 18-month process of wealth destruction. I believe we are facing a similar timeline, an 18-month crisis beginning now, in November of 2025, and finding its bottom around March of 2027. This crisis will unfold in 4 distinct acts. The first act is the crack, which will likely happen between now and the end of the year. It will be a sudden, sharp decline, perhaps 15 to 20%. It will be violent and shocking. The headlines will scream. The experts on television will be bewildered. This is the initial tremor that shatters the illusion of invincibility. Second act, and the most dangerous, is the false hope. Sometime between late December and January of 2026, the market will stage a powerful rally. It will claw back a significant portion of its losses. The optimists will declare victory, proclaiming that the dip was a buying opportunity and the bull market is back. They will call it a healthy correction. This is the most treacherous phase. It is the siren's lullaby, designed to pull you back into the water just before the real storm hits. This is the rally that will bankrupt those who believe the worst is over. The third act is the slow decline, a long, grinding winter that could last from February to June of 2026. This is not a dramatic crash, but a soul-crushing bleed. Week after week, month after month, the market will drift lower. Its rallies will be weak and short-lived. Hope will slowly curdle into despair. This is the phase that tests your patience, that wears you down until you can no longer bear the pain of seeing your life's savings dwindle. The fourth and final act is capitulation. This is the waterfall. From roughly July 2026 to March 2027, the slow decline will accelerate into a full-blown panic. This is where the margin calls create a vicious, self-reinforcing cycle of selling. This is where fear completely takes over and people sell everything they own at any price just to make the pain stop. This is where legendary companies, the pillars of our economy, will see their stock prices cut in half and then in half again. The headlines will declare the end of capitalism. The despair will be palpable. And this, my friends, is the moment the great wealth transfer occurs. This is the moment when fortunes are not lost, but made. So, how do you build your ark? How do you navigate this storm and emerge on the other side, not just intact, but stronger than ever before? The strategy is simple, but it requires a courage that is antithetical to human nature. It requires you to be disciplined when others are greedy, and to be brave when others are terrified. First, your work begins now, before the first crack appears. While the sun is still shining, you must de-risk, must sell your most speculative assets, trim your winners, and move a significant portion of your portfolio into the safety of cash and short-term government bonds. This is not market timing. It is risk management. It is recognizing that the potential reward is no longer worth the catastrophic risk. Building your ark now is the single most important decision you will make. Cash is not trash. In a crisis, cash is king. Tea is your shield in the storm, and your spear when the time comes to hunt for bargains. Second, and this is critical, you must not buy the first dip. When the initial crack happens, your instincts will scream at you to buy. The financial media will tell you to buy. But you must resist. You must remember the map. You're waiting for the false hope, the siren's lullaby. You must use that rally not to buy more, but to sell anything you couldn't part with earlier. Use the strength of others' optimism to complete your defensive posture. Third, you must embrace patience through the slow decline. This will be the hardest part. You will be sitting on cash while the market grinds lower and lower. You will feel like you are missing something. You will be tempted to jump back in, but you must hold fast. Your goal is not to catch a falling knife. Your goal is to wait for the knife to hit the floor, bounce, and lie still. Finally, you must act with conviction during the capitulation. When the market is down 50, 60, even 70% from its peak, when there's blood in the streets, and the last bull has thrown in the towel, that is your signal. That is when you take your cash, your carefully preserved capital, and you begin to buy. You don't buy indiscriminately. You buy the highest quality companies in the world, the innovators, the leaders, the survivors at prices you may never see again in your lifetime. You are not buying stocks. You are buying a piece of the future at a once-in-a-generation discount. This is how generational wealth is created. You are planting the seeds of an oak tree in the ashes of a forest fire. This journey will not be easy. It will test every fiber of your emotional being. But remember this: cycles are as natural as the seasons. Winter is not the end. It is a necessary precursor to spring. This is not a prophecy of doom. It is a forecast that allows us to prepare. You have a choice. You can be a leaf in the wind, tossed about by the gales of market sentiment, or you can be the captain of your own ship, with a map in your hand and a safe harbor as your destination. The tide is going out. You can wander onto the sand in blissful ignorance, or you can turn your eyes to the hills and begin to climb. The greatest fortunes are not made in the sunshine of the bull market. They are forged in the fires of the bear. The storm is coming. Prepare your ark.